On behalf of ProgressSoft Corporation, founding partner of CBPC and global payment solutions provider since 1989, I hope you're having an exciting first day of the event. A lot of discussions have already taken place on whether central banks should issue CBDC. The next panel, however, will discuss how central banks should issue this new form of money. From implications of CBDC on monetary policy to traceability and confidentiality, it is with great delight that I introduce you to the next panel, How to Issue Retail CBDC, presented by the Federal Reserve's Jim Cunha, the Bank for International Settlement Innovation Hub's Ross Lecco, Capron Asia's Zenon Capron, and ProgressSoft's Mohamed Kaimeri, moderated by CBPC's Chairman Jean-Michel Godefroy.
Thank you very much for this very nice presentation. We continue our journey towards CBDC. I'd like to thank again Tom Button for his presentation. I know there is a written version of his presentation, and I will see with him whether he would agree to share it with all of us, because as you have seen, it is extremely rich. To continue this journey, as it was mentioned, we have Jim Cunha, Zenon Capron, Mohamed Kaimeri, Ross Lecco, whom you know already. Jim Cunha is Executive Vice President at the Boston Fed. Zenon Capron is Director and founder of Capron Asia, a consultancy company. Mohamed Kaimeri is a software architect at ProgressSoft. And Ross Lecco is Senior Advisor at the BIS Innovation Hub, as you already know. But before we start our discussion, I would like to ask Jim and Zenon to give us some information on CBDC developments in the United States and in China to complement our, let's say, overview. So Jim, the floor is yours.
Great, thanks, Jean-Michel. It's a pleasure to be here. I appreciate the invitation. I'll give the normal Fed disclosure. These are my views, not necessarily those of the Federal Reserve System. So where we are is really two-pronged. Tom had talked about policy in the last session. And so policy in the U.S. is owned by the Federal Reserve Board in Washington, obviously with our Congress. And so the Board of Governors is about to issue a consultation paper following what many other countries have done to really understand what the perspectives are of the various people in the ecosystem, be they banks, technologists, or others. So it's really important, as Tom mentioned, to make sure we understand the pros and cons and perspectives there. So that's on the policy side. My background is technology and innovation. So what we're doing at the Fed of Boston on behalf of the system is technology research. And we've got a couple of initiatives. One is we're working with the MIT DCI, which is the Currency Institute. And what we're doing is building a research model. We're trying to see if we can actually build a CBDC, a theoretical CBDC that can meet the unique needs of the United States. So what that means is we have four major goals in the first phase of work, which is, can we make it fast enough? Can we process tens of thousands of transactions per second, which is what we think we would need at scale? Can we be fast? Can we do it in under 5 seconds? Can we build it resilient so there is no single point of failure? So we've just completed that first phase. We've built the core engine for minting the money and storing and moving it. And our goal is to publish a white paper with MIT, but also to create an open source license for the code. We think it's really important that the software be made available to anybody who wants to see it, comment on it, and even contribute to it. So that'll be coming out fairly soon. The second phase of work then is to take some really complicated policy questions. We're not setting the policy, but what we're doing is trying to understand what can the technology do. So for instance, the one that gets talked about a lot is privacy versus catching the bad guys, privacy versus AML. These policy options are at odds with each other, such that the more privacy you have, the harder it might be to catch the bad guys. And the more data about the users you have, it creates other usability and exposures that also create problems. So the goal here is, if we design new ways of looking at privacy versus traceability and add them into our system. One, can we still go fast enough? Because adding in new layers of technology will potentially slow the system down. But another thing is, while policy does define how a system is architected and built, might we be able to offer different policy choices with new technology? So our goal would be, can we maximize privacy and still catch the bad guys, still do AML and counter-terrorist financing? So that's another phase of work. We're starting with the Digital Currency Initiative, the DCI, at MIT. That'll last about a year or two. And then separate from that work, the Boston Fed is doing an analysis of open blockchain solutions and private sector actors that say they've built systems that could satisfy the needs of the US. So we're looking at both open source and private sector actors. The ultimate goal here really is to be as prepared as possible to act if we decide to act, or if Congress dictates that the Federal Reserve should issue a CBDC. So that's the work we're going on both in the policy side and on the technology research. And I said it's important for us to share that broadly across the ecosystem to see who else can contribute to this valuable work. So Jean-Michel, let me stop there.
Okay, thank you. Thank you very much, Jim. Zenon, about China.
Sure, and thank you, Jim, for the intro on what's happening in the U.S. I think China is coming at this from a different tact insofar that they are very keen to be first movers in this space. The economic system in China is quite different than many other around the world insofar that it's essentially a dictated capitalist economy with capital controls that bring in certain considerations around monetary flows in and out of the country, and indeed within the country as well. Just to give you an idea of kind of my experience with China, I arrived to China in 2004, and I distinctly remember at that time to pay the rent for my apartment, because I couldn't withdraw that much money from the ATM, I would have to go to my bank and actually sit and go to the teller to take out just over $1,000 and then walk it across the street in a paper bag and deposit it in my landlord's bank account. Because in 2004, those are the only choices that were available within China. Otherwise, you would have to fill out a stack of paperwork and pay a percentage of the transaction to actually make that transaction happen. I left China in 2018 to move down here to Singapore. And when I left, I was paying my utilities using Alipay. I was splitting the bill with friends on WeChat, and I was investing in financial products from Baidu, which is effectively the Google of China. China's digital ecosystem has changed so much over the past 2 decades, and effectively money is digital in China today. I'm sure you've heard stories, if you haven't visited China, of stories of people going there and wanting to use cash, but for the retailers or the merchants to actually reject it. So to a large extent, the adoption of a central bank digital currency in China for the actual consumers is not particularly that big of a change, as money is mainly digital there. People are used to using their phone. So instead of picking a traditional renminbi wallet, they'll just be picking an EUN wallet and funding whatever transaction they're doing with that. Now, the rationale behind China's move towards this central bank digital currency, there are many different opinions on this. What it's come down to for us is a more efficient way of controlling fiscal and monetary policy. One of the challenges in China is that historically the country was very provincial driven. So if you looked at a Bank of China as an example, Bank of China Sichuan might do something different than Bank of China Beijing, and the headquarters in the Bank of Beijing the Bank of China in Beijing may not have control over what's happening in each of those provincial level branches. So there was a strong challenge within the financial system in general with the commercial banks of controlling the flows of money. And then with the government as well, in terms of being able to control and monitor where the money is going, both domestically and cross-border, we feel that that's one of the big drivers around this. There's a lot of talk about the risks to personal privacy in this, and it is true that the yuan will be a controllable currency or programmable currency insofar that the government could decide to move the money in a particular way or shut down the usage of money, which brings up specters of what happened in Cyprus a number of years ago, where there was a haircut on anybody who had money in their bank. But to a large extent, it gives the government many tools at their disposal. To give an example, the SMEs, small and medium enterprises in China, are the bedrock of China's economy. One of the challenges for the government is directing funding towards these SMEs. Oftentimes, funding will go to the commercial banks, which is a key channel for getting money out into the market. But rather than lend to SMEs for which the money is defined or directed for, this commercial banks will use it and lend to some of the state-owned enterprises, the large companies that are seen as relatively risk-free investments. In theory, with a programmable currency, you could lock down the e-renminbi until it hits the account of an SME, and then it could be activated and used. So although there is this kind of view that there's a draconian usage and visibility that this will provide, at the same time, it really fits with what China is doing. One of the big questions, just to finish off my kind of intro talk around this, is what it means internationally. There's been a lot of talk that China is pushing this such that the renminbi is considered on par with the US dollar. That argument is a little bit of a false narrative when you think about that. The reason that the US dollar is the trade currency of choice is that it's very usable, fungible, and commodities are priced in it. So we really see that the CBDC may slightly move the needle in the use of the renminbi in overseas trade, but that's not the primary goal of the government. And indeed, when we look at the international implementation, there are a lot of open questions in terms of how it will be used, who can have a wallet, how those transactions will be monitored, etc. So let me pause there for the start and hand it back to Jean-Michel.
Thank you, Zenon. But I have a complementary question to you. Where are they? Where is the People's Bank of China in the journey towards CBDC? It seems that they are more advanced than many other central banks. Have they already issued CBDC, or are they going to do that soon?
Yes, certainly they are far ahead. So they have issued CBDCs. It tends to be in pilots for the most part at the moment. It hasn't been a wide rollout. That being said, pretty much anybody who wants to download the wallet in at least a major city can download one of the wallets either from the PBOC or from one of the commercial banks and transact on that. But it hasn't been rolled out completely yet.
Yes, I heard there are 25 million wallets already in operation, although this is not yet, they are still in the testing phase, as you said. Okay, thank you very much. Thank you, Jim. Thank you, Zenon, for this enlightenment on what happened in the United States and in China. Now, let's start our discussion, and perhaps I would like to start with the technical issues. Although Tom Button has said they are not the most important issues, at least for the moment, I'd like to see whether I could ask Mohammed to say a few words about what are the advantages that DLT could bring to CBDC, because most of the CBDC we have projects we have heard, I speak under the control of Ross, but most of these projects are, let's say, based on traditional technologies more than on DLT. So, Mohammed.
Thank you, Jean-Michel, for the question, and thank you for having me today. Good day, everyone. Regarding your question, the DLT comes with plenty of advantages out of the box, and emphasis on out of the box. First of all, decentralization. DLT comes with the ability to distribute whether the ledger, the technology, the consensus algorithm, and the ability to verify transactions. So this is a very important feature of DLTs because as previously mentioned during the conference, central bank money is the most trusted money. We believe in our central banks as people. And when we go and replace cash with another form of money, such as digital money or digital currencies, I want the same level of trust from people as a central bank. So if a central bank goes and issues a digital currency and issues it on a DLT with the ability to transparently inspect transactions, the ability or the trust that you cannot reverse a transaction on the DLT, this allows the people to trust more in the money issued as a in the digital form, if I may say. Now, DLT, the origins of DLT come from Bitcoin and its predecessors, but Bitcoin, Ethereum, all these public technologies, they gave us the gift of blockchain. We cannot reverse things. We can create things, but we cannot reverse them. And if I pay someone money, and I'm sure that I cannot go and repudiate that transaction, that's a boost for trust. Another thing or another byproduct of having a DLT deployed and used as a base for digital money or digital currency is the democratization of the technology and opening opportunities for fintech. When we allow the private sector in coordination or to play with the central bank to create digital currency and to create products out of that currency on a DLT, that allows for more innovative ideas. And that may change even how we think of money. When we think of money, we think of stacks of paper or plastic in other currencies. But maybe we can have more products, maybe we can have more advanced uses of money when we go digital.
Jim, thank you, Mohammed. You said the Fed Boston is working with MIT on technical issues. I mean, what would be your answer to this question of the role of DLT, the possible role of DLT in CBDC?
Yeah, well, first of all, we're agnostic on the technology. Some central banks are going in saying DLT is the answer. Some are saying it can't be the answer. So we're trying to be agnostic about it. I think it's really important in this whole space to be very clear about terms. So you can say blockchain or DLT and think about Bitcoin, where you've got an open network that anybody could be a miner and it's controlled by the developers and the miners. I don't think as many central banks are going to be using an open blockchain like Bitcoin blockchain for their CBDC. I just don't think we give control over the money and the minting and the validation to people in the public. But I do think there's parts of DLT, Mohammed mentioned, the resilience, the ability to have consensus across multiple copies of the data, visibility. I think you can get many of those things without necessarily having a Bitcoin-like blockchain. So I think the technology has promise. It also depends on your particular use case. So if you are the Bahamas, you have very, very small numbers of transactions. But in the US, if we're looking at tens of thousands of transactions per second, can blockchain currently support those? So we're agnostic to it. We are looking at blockchain, but I think it's also something you have to look at in the context of the country. And then just one more point about Bitcoin. Even though Satoshi did some really exciting things with the original white paper for Bitcoin, the technology was actually 20 years old. Having shared ledgers, having replication of data, having public-private key pairs, all came from 20 years ago. They're just put together in a way. So I don't think it's blockchain or not. I think it's more what are the building blocks you'll need to make a successful CBDC. And I think there's some good parts of blockchain or DLT to look at.
Okay, thank you. I'd like to ask a question to both of you, or also to Ross and Zenon if they wish to contribute. It concerns programmability. I mean, we hear quite often that DLT could bring, let's say, more functionality to CBDC through programmability. I mean, could you maybe Mohammed explain to us what is programmability and give a concrete example of that?
So let's begin with the example. We're living in the COVID area. Many countries, many governments went and printed checks and sent them to people to help them pay the rent, pay the bills during these hard times, unprecedented times. An example of programmability is when a country, a reserve bank, a central bank goes and prints money in a certain economic mechanism and sends money to people. It's intended to be used to stimulate the economy. So this money is not meant to stay under the mattress. It's not meant to stay in your bank account. It's meant to be spent so you keep the economy running. So one of the best examples on programmability of money is when you go and you print money, programmable money, digital money that says, or hard-coded in it, it should be spent on rent, or it should be spent on buying groceries, or should be spent on buying services and goods to stimulate the economy. So this is a clear example we're living in these days. So this is one of the things. If you extend the programmability of the digital currency to wider use cases, to a wider landscape, it can go to other things, such as when we move registries such as mortgage and land registries and move it to the or let's say marry it with digital currencies, you can come up with solutions such as mortgages on or married to digital currency. You pay money at the end of every month, and it moves you closer to owning that house you're living in as you become the sole owner of that house. So these are two clear examples of programmability of money, and it gives more tools for central banks to use money.
Jim?
Yeah, so I guess as a general, and once again, here's where terminology can get very slippery. So you can think about it as, adding any logic to the money. So I think, as Mohammed said, the example there is, but I think one of the things you have to think about is, should the money be smart, or are there other ways of getting that functionality but not have it embedded in the money? My personal view is money should not be smart. Money should be safe and fast. And if you want to add functionality in, I think you should be very careful about doing it as part of the money. You can do it as part of the wallet. There can be logic within the wallet that helps to provide some of those things that Mohammed mentioned, or it can even be in outside systems that would generate a transaction to pay my monthly mortgage rate, et cetera. So I think the challenge is to understand what's the use case you're trying to solve and where's the best place of doing that. I wouldn't want my money, for instance, to be making decisions for me or to stop me from doing something. If anything, I think that can be in outside systems. But I do think it does open up a possibility for creating more functionality and creating more usability within the money. But it doesn't have to be the money being smart. As I mentioned, it can be, other layers of the broader payment system.
Okay, thank you very much. I think it opens a field of thinking. I mean, we could discuss that for longer, and certainly this will be discussed by central banks when they consider CBDC. Another question which comes to my mind when we speak about CBDC is the question of, should the central bank offer CBDC directly, as in the model that Ross has explained a few minutes ago. That one of the model is a direct model where the central bank offers services directly, but it doesn't seem to be the case in most systems that we have heard of. You saw, for example, that even in the Bahamas, which is a relatively small economy, the central bank does not intend to be in the front end vis-à-vis the customers. So then the question which comes to our mind is then, who should be the intermediary? If the central bank, assuming the central bank has intermediaries, who should be the intermediaries? I mean, Zenon, have an idea about this?
Yeah, unfortunately, I didn't see Ross's talk about it before, but I'm sure that was that touched on a little bit more detail. From my perspective, it comes down to how are we going to get the consumers to use these things, and I think this kind of points at what Jim was saying, Mohammed referred to is, we have to think about the end user of these and keep that in mind. I mean, in terms of programmability, my money is already programmed because my wife takes care of, where the money is going in our household for sure. But, in China, one of the challenges has been adoption, even in these trials, right? So they've, Alipay and WeChat Pay, if we look at the history of those two platforms, they subsidized payments, both with the merchants and the consumers to get people to adopt the platform. Now, do commercial banks and the central bank want to get into the business of subsidizing payments to spur adoption is a big question that is going through in China right now. And that has two elements of it. It's just ease of use. To give you an idea, when you're making a retail transaction, so you're buying something at the 7-Eleven equivalent in China, if you were using a card, you would have to insert your card, type in a PIN, and then do a signature. All of the cards in China are IC cards, chip and PIN cards, but because the risk of fraud is with the consumer, unlike in the US where the risk of fraud is with the issuing bank, contactless is very rare in China, which makes for a very friction-full transaction. It's a very tedious transaction, whereas if you're using Alipay or WeChat Pay, it's a QR code. And so if the government comes around to, and they will eventually, incorporating these digital currencies into some of the more popular digital wallets, meaning Alipay and WeChat Pay, the adoption will grow very rapidly. I think the challenge is, when you have a commercial bank, to give you an idea, using, we bank with supposedly one of the more progressive banks in China, but it still takes me 2 USB sticks and 4 passwords to make a payment. So you can imagine the customer experience in that is not very good. So, from my perspective, the customer experience is really, who is going to provide the better customer experience. I mean, you could have multiple layers of intermediaries there, but whoever's delivering the digital wallet on the front end really needs to have an experience that people want to use. Otherwise, it's just going to sit there. And that's the problem that China is facing right now in adoption.
Maybe, Jim, I would reformulate my question specifically for the US. I say, is there a specific role for banks in the distribution of CBDC, or will banks just be an intermediary among others?
Yeah, well, that's part of the policy question that is currently out for, or will be soon out for consultations. I think it's an important one. My personal view is that banks will be in the distribution model because they are today with physical cash. But then again, if you think about it, once I get my physical cash, I don't need my bank. So do you copy that model where I can move it to Zenon directly, or can I tell the central bank to move it directly without having to go through the bank? It's an open question. But I also believe that it should be a public policy goal of the CBDC for financial inclusion. I think there are a number of areas where we basically where people either don't have bank accounts or they're paying exorbitant fees for check cashing, which I just think is abhorrent that we have that situation. So I think if we say that's a public policy goal for financial inclusion, I think we have to have intermediaries that are non-banks too, because by definition, the banks will not reach the unbanked people. But also, one of our key principles in what we're designing is flexibility. So if I build something and it gets launched, it has to be flexible enough to handle something 10, 20, 30 years down the road. So we're not precluding direct accounts. By design, we could do direct accounts. I think that's highly unlikely, at least to start with, to have direct accounts. But I don't think the system should preclude change down the road. It should be flexible. So I think there'll be intermediaries, mostly banks, but also non-banks. And I think that's where the innovation is going to be. The innovation on top of the CBDC, I think, will allow us to support, I think Mohammed or someone, maybe even Tom earlier, talked about micropayments or IoT. I think that's the innovation by those intermediaries is where you'll get some of the greatest benefits.
Thank you very much. It is often underlined, at least I've heard that many times when I was, let's say, still a central banker. My colleagues underlined a lot that cash is expensive. Cash is very expensive for society. even if people do not see the cost of cash. The cash is hidden, perhaps it is spread by the central bank, the banks, the commercial banks, and so on. And then CBDC appears as a way possibly to alleviate this cost. And then at the same time, we hear more and more central bankers saying, okay, we are carefully studying CBDC, but we don't want to replace cash. So is there not here a sort of a contradiction? The more we speak about a way of possibly replacing cash, the more central banks say, that's not what we want to do. We want CBDC to be in addition to cash. So maybe, Ross, you have in the BIS Innovation Hub a rather helicopter view on what happens among central banks. Could you say a few words on that?
Sure. Well, thank you, Jean-Michel. I would say that the desire to introduce a CBDC doesn't preclude the continuing existence of cash in some form or for some purpose. And central banks, as you've said, have never said that the purpose of issuing a CBDC would be to eliminate or replace cash. The truth is that, at least for the foreseeable future, cash will continue to have a role. And particularly, there are people in society, including those who are probably less technologically literate, who still use cash. And I think central banks have said that as long as there's a need for cash, they'll continue to provide it. I think it has to be recognized over time, though, that a CBDC, given its digital form, would offer advantages and capabilities that cash, of course, doesn't have. But I think in the short term, I think cash will probably continue to survive, and we'll see what happens in the longer term.
Jim, you're the central banker in the group, so what is your view on this question? Is CBDC to replace cash or to be in addition to cash?
No, I think it's in addition, and I really think it's a matter of choice. Providing choices, and then as Zen says, based on the design and the functionality, the best product should win. And I think that while there's always competition amongst any type of payment system, I think there's an opportunity for coexistence amongst a lot of them. I do think that there'll be an erosion to some point, but I remember back in reading stuff about the 60s when someone pronounced that the checklists in the cashless society were coming. And we still have a lot of checks in the US. We still have billions of checks. So I think the demise of cash is nowhere near the current, anywhere in the near future. And that shouldn't be the goal. I think it's really about choice.
Yes, but I'd like to continue this discussion because, okay, cash will continue to exist for some time. But the problem when cash is used to a very small extent is that it is very difficult to use it. It's a long time that in Scandinavia, I cannot use cash. And recently I went to London and I was unable to use cash even on the marketplace outside. So, I mean, the question I would like to ask is to say, how long, especially if CBDC gives let's say, a substitute to cash, how long will it be possible to continue to have cash as a residual, let's say, form of money? I know I'm a bit provocative, but maybe I'd like maybe our four speakers to give their view. Maybe I start with Zenon.
Yeah, I mean, I think you're being productive on a panel of central bankers. So I think cash is. We can agree that cash will disappear. It's just a debate on what that time frame is. And a lot of the work that we do at Capron Asia, we do a lot of developmental work as well. So we see kind of what's happening in the economically emerging countries that are still reliant. And we did a paper last year on humanitarian cash transfers, so very specifically in humanitarian settings. And one of the things that we found with that is that beneficiary preference really matters, because if you're sitting in New York at the World Food Program headquarters, it looks very cheap to make a digital or non-cash transaction to the individual maybe sitting in a humanitarian camp in Yemen. But when you actually look at the cost for the beneficiary, perhaps they have to go 5 kilometers to the nearest ATM to actually withdraw money against that. So there are challenges around that, but I think we are seeing a lot of development and expansion of these platforms. A good example is in China for the people that do not have a smartphone, which is probably about 20 to 25% of the population. There's a card. There's basically a digital card that's being distributed to all of the individuals where they can use it in place of a smartphone for making transactions. And indeed, the e-renminbi is designed such that you can be completely offline and make transactions, which deals with, if you look at cash usage in places like the Pacific Islands or Indonesia, I mean, Indonesia is an archipelago of hundreds of islands. And one of the biggest challenges is, can we get infrastructure there in terms of mobile connectivity to make a digital transaction? And often you can't. But as we start to see these solutions that can be used in completely offline settings, then the possibilities increase, because that is one of the key challenges is where can you access this? And then as you build out that ecosystem, like in some of the camps in Jordan, as an example, going back to the study that we did, they're starting to use cards based on DLT for storing value and making transactions. And as the merchants start to accept that, then the people are more comfortable with using that. And there are particular pockets where that use case is gaining traction. But I would say a decade from now, when we come back for central bank payments, 2031, we won't be talking about cash at all. We'll be done with cash.
Thank you. I think what is important is to say the language of central banks all over the world is to say we will continue to have cash as long as there is a demand for it. That's usually what I hear. But the problem is that at some stage, the demand becomes so small that it's difficult to have the network effects that is needed for any type of currency. So how long do you think we can have this coexistence of cash and digital? Maybe I ask you, Zenon, just one timeline, and then I ask the three other panelists also for their view.
I'll use it in the context of China. I'll say that 90% of the population within 5 years will be completely digital, and within 10 years, 100% digital.
Jim?
Yeah, I'd say in the States, if you look at the electronic payment systems we have today, we still have a lot of cash, we still have a lot of checks. So I don't see a quick demise for paper currency, especially until we get a good offline solution, because there's still many cases where the only way to transact is with dollars, be it a disaster area. But also give you a little story about the U.S. For many years, many have been trying to get rid of the penny. It costs more money to make a penny than to actually than it's worth, and we've not been able to get rid of the penny. So I think whatever the forces are that create the penny to still exist are there for paper currency and larger coin. So I don't see a short-term demise of currency in the U.S.
Okay, Ross?
I think it's a question of financial inclusion, in the sense that to the extent that cash disappears, it's important that digital forms of payments are capable of accommodating all segments of society. As Zenon pointed out, with alternatives to using a smartphone, for example. But I tend to agree with Jim. I think it's going to be a while before you see cash disappear.
Mohammed?
I'm coming to this from a different angle, the legal angle. I'll begin with an example. So in Australia, if you're going to vote, whether federal elections or state elections, you need to vote with a pencil. You can't mark your ballot with a pen. And if you go to the origin of this story, it's because in the act, in the laws, in Australian laws, you need to use a pencil, not a pen. This goes in a similar direction. This goes back also to cash. There are certain things we can't, unless CBDC or digital money covers it, we still need cash, such as political donations, because some of them are anonymous. And to guarantee my anonymity, I need to use cash. Another use is when I pay for doctors. Let's say I need to go to a doctor. I need to pay with anonymous money. Cash is my preference. It's not my credit card. It's not my, let's say, debit card. So if we find a solution for these particular cases from a legal point of view, I believe we will get closer to having, or to eliminating cash altogether.
Yeah, I think I agree there is a legal issue, and I know Ross is a lawyer, but I understand there is a big issue about whether CBDC will be legal tender or not. Many people believe that simply because it is issued by a central bank, it will be legal tender. They forget that usually legal tender is something which comes from the parliament. It's a decision which is not a central bank decision. And if in some countries, for example in France, a shopkeeper is obliged to accept cash. Apparently, it doesn't seem to be the same in the UK or in Scandinavia. So maybe you can give some clarity on that, Ross.
Sure. Well, just coming back to Mohammed's point, I think that it points to the need. I think the fact that anyone consider it's difficult for me to consider a major country issuing a CBDC without comprehensive legislative reform. And one of the things that would have to be addressed would be the treatment of the central bank digital currency as legal tender or not. Currently, there are different concepts of legal tender that range from encouraging the use of the national currency to mandating it in certain circumstances. And in most countries, legal tender is currently limited to banknotes and coins, because these are payments instruments that are readily available and usable by everybody in the country, and secondly, are risk-free. It would have to be decided, but I think it's conceivable that with the issuance of the CBDC itself would also be made a form of legal tender for, to some degree, mandated use in transactions.
So we are discovering that there are a lot of big issues behind this CBDC. Now, Ross, since you have the floor, what are the other legal issues that should be studied in the, let's say, in the investigation phase, to call it like the ECB?
Well, maybe I can mention 4 others that I think are worth consideration. The first, obviously, is whether the central bank has the authority to issue a CBDC. And that will depend on the design of the CBDC, but also the legislative framework in which the central bank operates. And as I said, personally, I think in most cases one would have to consider some form of legislative change. The second issue beyond legal tender concerns the design framework of the CBDC and the respective roles of the public and private sector, the role between the central bank and the private sector players who would be part of the same ecosystem, what their responsibilities are. And I think related to that, the treatment of data within the system and privacy. I think another important issue concerns the ecosystem outside of the CBDC and the legal framework governing digital payments, and to what degree that would have to be updated to take into account the central bank digital currency. Maybe I'll stop with those.
Okay, thank you, Ross. I just say to the audience that if they wish, they can ask questions. We're not sure that we are going to be able to answer the question, but at least we can see the questions. But I continue with my questions, and one of them concerns the question of additivity versus traceability. I mean, I'd like to ask a technical question then to you, Mohammed, and also to Jim. I mean, my understanding is that CBDC can be as anonymous as a Bitcoin, or can be as traceable as bank money, or anything in between. And am I right? Or because that is a wonderful situation for central banks, if it is true. Mohammed.
Yes, you are correct, Jean-Michel. But I need to clarify something here. It's pseudo-anonymous. It's not proper anonymity. So if someone decides, let's say they have a couple of the ledger, I want to track this bank account and see, or this particular wallet and see their spending patterns, I can do that. There are solutions for that, such as hierarchical deterministic wallets. There's a solution. Now, where do you set, if let's say we have an island somewhere who want to implement a CBDC, and do they want to have it fully traceable, or do they want it to have it pseudo-anonymous? where the slider goes between is a legal question, a cultural question. From a technical point of view, we can push the slider anywhere between these two extremes. Because from a technical point of view, we can trace everything. But if you want the technology to mask transactions, to hide some of your transactions, we can do that also from a technical point of view. Now,
I think, yeah, please.
Yeah, well, what I'm trying to say, we can hide your transactions. We can preserve your anonymity for a great level. I can't say 100%, let's say 99.999. But do we really want that to happen is a question that has to be answered by who is the Reserve Bank or the central bank issuing the currency.
I think as a former central banker, I can tell you that probably what I would like is to be sure that I don't need transparency, complete transparency, because there must be some privacy in the system. But as a former central bankers, I was embarrassed by the fact that banknotes were totally anonymous at a time when we want, let's say, to fight against anti-money laundering and so on. But Jim, you are still a central banker. So what is your view on that?
Yes, and I'm also a technologist. So
yes, and also as a technologist.
I think Mohammed said it well that with Bitcoin, it's a pseudo-anonymous, and there's a lot of information that people can glean from the patterns. But I think you have to ask also, anonymous from whom, or privacy from whom? So for instance, if I was the Federal Reserve and I had a ledger of all these transactions, but banks with the intermediaries, it may be the bank knows who the customer is, but I don't. Because all I get is anonymized data within the ledger, but the banks know who you are, like they do today with payments. So I still think you have to break it down into the various layers and think about what your goals are, and then anonymous from whom. And there are solutions where it's a combination. Like maybe you're anonymous under $500 or pseudo-anonymous, and above that you have to do more KYC and anti-money laundering. There are new techniques that allow you to obscure the data, but still examine it for the bad guys. As I mentioned before, can we build with new technology a way of checking the data for compliance and for anti-money laundering checks, but still not expose that data unless we get a hit and find a bad guy? So there are ways of thinking about this differently, I think, that are using new technologies like zero knowledge proofs or various encryption schemes where I can obscure the data from most everybody unless it's a bad guy, and then I expose it. So I think there's a sliding scale. As Mohammed said, it's just really what are your goals? And sometimes privacy and lack of privacy are at odds with others. So I think that's the challenge, is to define all that and then make your system flexible enough for change. I mean, if people knew about GDPR 20 years ago, they would have built systems differently because of the privacy considerations. So how do you think about building a system that allows for changes of regulatory frameworks around privacy or even norms? And I think that's the real challenge that we have to think about for CBDC, is to build flexibility and to allow for change.
Okay, thank you. We start having very interesting questions from the audience, and one comes from Pete Madacott, and he is asking, what would be the incentive for merchants to accept CBDC? And I think that's a very interesting question. I mean, if central banks put CBDC on offer, how can we be sure that there will be a demand for CBDC? Who wants
I'll throw out one. One is a substitute for cash. Cash is very expensive for merchants, and there's loss through theft. There's physical handling. There's a lot of cost for cash. But also, if I was a merchant and I took a CBDC versus a credit card, for instance, I don't pay interchange. So you can think of different incentives for various people in the ecosystem to both desire and not find it too attractive. So I think those are a couple of things that come to mind for merchants.
Let's say, and if it's not merchant, if it's myself as an individual, why should I use CBDC? if I have, you can say, okay, banknotes is not very convenient. Okay, fine. But if I have bank money available, why should I use CBDC rather than bank money?
Well, I think, if I may, I think one of the
Yeah.
answers to that question will depend on the country in which the question is being asked. Obviously, maybe a little bit more of a debate in an industrialized country, but in many developing countries, many people don't have bank accounts. The CBDC is really a vehicle through which they can be brought into the formal financial sector and make payments with that. I guess there are other considerations in more industrialized countries, but I think in particularly in the developing world, this will be a critical consideration.
And also, I throw a couple others
You-
too, which is,
Yes.
what if I am unbanked and I don't want to go to a check casher and I can use CBDC? I'll save significant money for someone who can't afford to pay those fees. So I think there's, depending on the goal, also even talked about whether the money is a public good and would be available free of charge, like paper currency is in most countries today. So in which case I may save money by using CBDC versus some other form where I'm paying for a debit card transaction fee or something else. I really think there's a lot of nuance as to why it's more attractive or less attractive. But it really depends on the goals of the public policy and how it's built.
Yeah, and coming quickly back to merchants, obviously, if the consumers want to pay with CBDC, they will have to accept CBDC.
No, okay. I take this point. That is to say that in the end, maybe the key question is less the merchant and more myself as a citizen. And maybe I ask the question to Zenon, because I mean this is an issue in China, I'm sure, given the success of WeChat and Alipay. I mean, how is the People's Bank of China going to position their CBDC into the payment, the means of payments in the country?
Yeah, and I think that's a big challenge. I agree with Jim what he said about the merchant payments. In jurisdictions in Asia where we've seen the launch of real-time payment systems, it's been a boon, especially in India. India's UPI, I mean, that has done phenomenal things for merchants because it's taken their cost of transactions way down because of the lack of interchange or just a fixed interchange there. But that challenge on the consumer side, so that's fairly clear for the merchants. I mean, it's a cheaper transaction. I think for the average micro or SME, the idea of cash being expensive, it's very difficult to conceptualize sometimes because cash is very physical and you can have it. So I think, although I completely agree with the argument that it is cheaper and less fraud and safer and all of this to have digital, that may not resonate with the merchants, especially in the financially excluded areas. But I mean, when we talk, so if we assume that financial inclusion is a small use case within the overall usage of a CBDC, just exclude financial inclusion as an application for a second, it's a big challenge. In China, when the digital banks in China launched, Ant Group and Tencent set up MyBank and WeBank. One of our team members, who's a fintech analyst, I asked her if she had opened up an account with them, and she said, no. And I said, why didn't you? And she said, well, I can do everything I need to do with Alipay, so why would I use this other system? And it goes back to what I was saying before about that subsidization to get people to use the platform initially. Now, what will in all likelihood happen is that the government will mandate companies to pay into the central bank digital currency accounts as opposed to traditional renminbi accounts. And so then, when somebody opens up their Alipay wallet and they want to make a transaction, their money is going to be in that e-renminbi account, and they'll just select that as the source of funds. But I think in all of these cases, especially when the government is so heavily involved in it, I guess with stablecoins, it's kind of a different conversation, but with CBDCs, it has to come from the government to encourage consumers to do it. Otherwise, it's not going to happen.
But it's interesting. This idea of subsidizing is an interesting question. It leads to a question asked by the audience by Bonnie Brodsky, and she said, I mean, to what extent could the introduction of a CBDC crowd out private sector solution for financial inclusion and digitalization? How can this be avoided?
If you allow me, Jean-Michel. So we at ProgressSoft, we deal with a lot of potentials. We deal with a lot of things related to CBDC. Many central banks around there, they're not talking about CBDC only. They're talking about fintech sandboxes alongside any work on CBDC. So it is in the interest of a central bank to bring in initiative from the private sector, in a sense, because since the beginning of this discussion of the panel, central banks, they want to issue CBDC, but they don't want to be at the front of the shop, if I may say. They're pushing it towards the banks, maybe towards payment service providers and other fintechs. So it has to be, in my humble opinion, it should be something where the private sector, in cooperation with the central bank, should issue CBDC, or at least they should be familiar with the technology and allowed to be a platform for other solutions or existing solution.
Okay, so it's just an interesting point. I would like to reformulate slightly just to check that I well understood. I mean, what you mean here is to say CBDC, because it's not offered by the central banks directly to the public, CBDC would be a sort of raw material. And then the fintechs, whether in a sandbox or not, would in the end build on that raw material to offer services to the public. So the only competition would not be with, let's say, financial inclusion solutions or whatever. The only competition will be with the other raw material, which are the banknotes and bank money. And maybe electronic money. I don't stable coins. I don't want to elaborate too much on that, but you are saying there is no real competition because central banks would just provide the first layer.
Exactly. That's a way of looking at it. So the central banks will provide them the platform. You can build on top of it. Now, there's a nuance, like there is an exception to that particular, or to this description when it comes to the unbanked customers or unbanked citizens. We mentioned people who don't have bank accounts whatsoever, and we want to bring them on board for financial inclusion. The central bank can focus on these people, while for the greater audience, for people who are already using private sector solutions or using bank accounts, you can provide them with solutions through other private sector partners, if I may say.
Okay, dear friends, Robin has just mentioned to me that we just have 2 minutes to finish this panel. I mean, we could have continued for long. I mean, you have so much, so knowledgeable about this that it would have been a pleasure to listen to you much longer. But I would like, nevertheless, to ask one last question to each of you. I mean, we see that the pressure for CBDC to progress is very strong in various parts of the world. What is the main obstacle? If we look at this from this perspective, I mean, what do you expect to be the main difficulty that central banks will meet in their travel towards CBDC, and could perhaps convince them in the end not to issue CBDC? What would be the blockage case? One blockage case. I mean, maybe I start with Jim as a central banker.
Yeah, well, I think there are technology challenges. So how to make it resilient and safe, because if it's digital, obviously it's easier to think about theft or fraud or counterfeit. So I think it's some technical challenges, but also you're working within an ecosystem with incumbents. And so people have ways of doing things today, or they have profit motives that are legitimate. And so how do you balance the interests of all the parties? And as Ross said, Tom earlier, do no harm.
Okay, Mohammed, what is the main blockage possibility?
Political will. It is something new. I mean, it's something new. It has to be discovered. Maybe the banks should just push ahead with this thing and have it in coexistence with other existing solutions and see where it goes.
Okay. Zenon, what is the main blockage? What could block the process?
I think it's the use case. It's, in certain places there's just, I mean, here in Singapore, as an example, I mean, we have real-time payments. We have plenty of choice of cross-border payment providers. We have, there's a little bit of high cost, but it's really, what is the use case for a country of 7 million people to have a central bank digital currency? That being said, I think in the longer term, every country will have a central bank digital currency.
Okay. Ross?
Well, as the lawyer in the room, I'll mention the legal framework. We have many technical challenges to overcome and the others that have been mentioned, but obviously the issuance of a CBDC, a retail CBDC, would require legislative change. And it's important that we get the answers right, but then we ensure that we can get things through Parliament so as to support the work being done at the technical level.
On that last point, Ross, as a non-lawyer, I tend to be optimistic. As long as there is a business case, maybe the business case is the big issue, but as long as there is a business case, I think there will always be a legal solution. But that's just because I'm optimistic.
Of course.
I would like to thank you very much, Zenon, Jim, Mohammed, and Ross, for this very interesting discussion. We see that it's just the opening. There are a lot of issues to be discussed. And now I would like to turn to the last presentation of today.